A man walks along the streets on the Lower East Side of Manhattan, heading toward the intersection of Broad Street and Wall Street. Holding his hand and keeping pace is his 9-year-old grandson. Young Daniel Frischberg is about to get a first-hand look at the New York Stock Exchange. He doesn't realize it yet, but his destiny is to be a major player in the world of finance. What he's learned over nearly 50 years, he'll teach you today, and it's all free of charge. There's a billionaire locked inside you. The key to freedom is information, the kind of information you find here on the MoneyMan Report. Now, here's the Money Man. Here's Dan Frischberg.
Good morning, everybody. Welcome to the MoneyMan Report. Podcast, radio show, whatever you want. And you can hear this one, and you can hear all of the back ones. You may be hearing it on Spotify or what is that? iHeart Radio and all those things. But you can catch not only this one and watch it in video, but you can also catch all the other ones because there's an archive full of this stuff. And it is on themoneyman.com, www.themoneyman.com. There's also a terrific video that I made, a class that I made, that's going to tell you a lot of stuff about that you need to know right now, and it's free. You don't have to sign up. You don't have to give your credit card, and you don't have to commit to anything in order to get that free webinar. But right now, let's get on with this MoneyMan Report, right?
Yes, we're looking at you getting younger. And so is that the 70s? Is the new 60?
Well, I don't know. I feel perfectly the same. I can hardly believe that I'm 75 years old, going on 76. But I feel not that much different than I felt 20, 30 years ago. I can't run as fast, and I can't really work out as hard, and I'm not as athletic, but I feel great, and I feel fine. So, look, I'm just very lucky, and I can tell you for sure that having a young chick makes all the difference in the world.
You think so?
Definitely. I haven't got the slightest doubt.
Who is that chick? We need to find
beautiful,
that chick.
Yes, that's right. It's the beautiful Alicia. And folks, you can't have any. Find your own.
That's what you tell Larry.
That's okay. Right.
So what do you do? Because you've been doing this for a long time, and I've been watching you close to 40 years. So before you go to sleep, do you think of the market? Because your cut, you have this, for some reason, that's what you like the most.
Well, I can tell you that in the last month, up until just a few days ago, I was puzzled. And so I was actually puzzling, and I was thinking about it. I knew I got an answer, and I didn't know what the answer was. The thing that was puzzling me was the world caught on suddenly that COVID is going to be gone. And now the world, or parts of the world, the smart part of the world, the people with brains, are now thinking past the COVID and thinking about it's time to grow, and the economy is going to grow, and we're going back to rebuilding the world. So all of a sudden, the things that I was making tons of money on, which were companies like Roku and Fastly, because these are platforms that the world is building. All of the new world is being built on that. These are modern, new inventions that are making it possible for us to have the world that we have, with making it possible for somebody in India to be able to maybe live like we do, where I can stop off at a red light, and I realize I got to buy sneakers, and while I'm stuck at the red light, I can bring up Amazon on my phone and actually buy sneakers on Amazon while I'm stopped at that red light. And they can't do anything like that in India or Borneo or something, but they're getting it, and they want it, and they're going to be able to do it. And so, but in order to be able to do that, they have to be built on a platform like Fastly that brings the internet very quickly to them, has security, stops hacking and all that. Those inventions are unbelievable. And Fastly stock is going to be worth 5 times what it's worth now. And we made a lot of money on things like Roku, maybe 3,000% over a period of 3 years. It was invented. It was like a $30-$40 stock. We knew that it was going to be popular and the whole world was going to want it.
You say we knew, but that's you. So
I
how
knew.
do you
I
dissect?
Well, so my son called me and he made me make that decision a couple of years ago. He said he just won this $1,000. He's in college, and he said, "What can we do with it? Can teach me to day trade?" And I said, "Day trading is for idiots. You don't want to do that." But you know this thing that you made me buy so you could watch football games, and we attach it to the back of the television, and it was like $30. And now suddenly we can watch anything we want to watch. I thought that it was just a gimmick. But now I know that it's much better than what I was doing before. I'm getting rid of DirecTV, getting rid of cable. I'm going to save $300 a month. And I know that everybody in the world is going to want this thing. So he had this extra little bit of money. And I said, let's take your $1,000 and buy option on Roku. Well, over time, a couple of years, he ended up with $30,000 of equity in Roku, because he used a lot of leverage. He didn't just buy the stock for $30. He ended up buying options for 1/20th of $30. So he owned 20 times as much. And when that company went from being worth $40 up to being worth a couple of hundred, now it's like 400. But when it was worth a couple of $100, he made 10 times what he would have made if he owned the stock, 20 times. So here he is, suddenly a 20-year-old kid with what, $50,000, $70,000, because he invested it in a cool thing.
But see, it's a long term. Don't get confused with it.
Right, but I wasn't looking for something at that time. I was all committed. It was just, I thought of it because he asked me, what can I do? But I was telling you what was confusing me in the last month was companies like Roku that were the only thing worth investing in during all this COVID stuff. Suddenly the world knows that COVID is going to be over. And instead, now the truth is Roku is growing very rapidly, but they really don't make a profit yet because they're choosing to reinvest the money that they make in research and development, making Roku better, spreading it around the world, getting television makers all over the world to put Roku inside. Yeah, they're doing very smart stuff. I love what they're doing, but they're not really profitable yet. And I think using our brains, we know that it's going to be worth a lot in a few years. But suddenly, here we are. The world is going to resume growing. Every place in the world. We're about 50-60% cured in America, immune, right? And yet maybe it's 30-40% in Europe and maybe 25% in Asia. And everybody's worried about the suspense. And the news loves to tell you about all the backup and the obstacles and how bad it's going to be and it's going to take forever. So most people are dumb enough to listen to what they're saying on the news and not really think about it. I know that it doesn't really make the slightest difference to me whether it takes 3 months or 6 months or a year or 2 years. The world is going to be growing so fast because we're all coming back. And you and I go to a bar now and it's full of people, right? They're all in there having a great time. You go to the airport and they're wearing masks on the airplane, but you don't even really need that. And the airplanes are getting full. Now they got people in the middle seats. Everybody's starting to live again. Mm-hmm. Well, that's what's happening in Texas. But the truth is that a year from now, it's going to be half the world's going to be doing that, or 2/3 of the world. Everybody's going to be growing. In order to recover, which everybody's going to do, in order for it to recover, you know what? There's not enough copper. Copper mining companies like Freeport-McMoRan mine copper, and they make a profit on it. It's not like maybe they're going to make a profit in a few years and I have to be a visionary. This company has copper mines. Hardly anybody has copper. There's not enough copper to go around. The price of copper has gone from $2 to $4.50 just in the last year, right? And now we're just starting to grow. That was just anticipating growing. That was just China trying to stock up on copper and wiring companies trying to stock up on copper, right? And car companies knowing that you need 4 times as much copper to build an electric vehicle as you do a gas vehicle. So there were people stocking up on copper who knew about it, but the average person listening to us had no clue about this, wasn't interested, right? But now suddenly the world knows it's going to rebuild. Everybody knows now there's not enough copper to go along. Not enough copper, not enough aluminum, not enough cement,
not enough contractors to
not
have
enough
employees.
steel. That's right, not enough everything, and everybody wants more of them. So when somebody's got the only supply of it, like the copper mine companies, and you know what, they have. I was just at a meeting listening to this. The CEO of Freeport-McMoRan said, we've got all these mines, we've got new production coming online, but if we needed to go past what we've got right now, we couldn't do it. It's going to take us 7 or 8 years to find it, make contracts with the companies, and be able to build it. We can't produce any more copper than we're going to produce this year. We cannot produce it faster for the next 7 or 8 years, but it's already doubled from $2 to $4.50. Now it's going to double again, and nobody can get more copper than it's happening right now, and everybody wants it. So you know what? I want to be in the copper business. I love doing this podcast for you folks. I love doing all this stuff, but I want to be in the copper business. I don't even want to worry about Roku and if they're going to make a profit or Fastly. I want to own copper. I want to own Alcoa aluminum. These guys are making a fortune. I know that over the last year, if you would have owned the options that I now own on Alcoa aluminum, you would have turned $5,000 into $150,000. You understand? In 1 year. And so it's going to happen again, in my opinion. As a matter of fact, when we come back from this little break that we're going to take now, I'll give you, that was an approximate number. I'm going to give you the exact number so that I can be accurate, just in case somebody really wants to check my thing. It's about that, but I'm going to tell you the real number when we come back. So
You got him so riled up. That's the beginning.
You've heard it said right here, with enough leverage, you can multiply your investing strength and move mountains. So think about it. How'd you like to own companies like Roku or MasterCard or Raytheon and put down as little as 5 or 10% to unlock the treasure chest of unlimited upside gains? You can, all the while drastically reducing your risk, and you can do it with zero borrowing costs. You just need that leverage and a little know-how. So Dan Frischberg is going to allow you to pick his brain to better understand the concept of leverage. These are special online training sessions called the Pick Dan's Brain Option Service. You can use just a little bit of money to potentially make incredible returns. If you want to make real money, you owe it to yourself to take advantage of this once-in-a-blue-moon opportunity. All you have to do to try it is to go online and register so you can see the results for yourself. The cost is next to nothing, and look what's waiting for you. Each week, Dan will discuss a few detailed trades, quality, actionable trades. You get detailed instructions on buying and selling specific put and call options. The Pick Dan's Brain Option Service shares specific underlying stocks, expiration dates, strike prices, and shows you how much money you could make instantly. It's Dan Frischberg's time-tested, proven money-making discipline that he's used for 50 years to make himself and a lot of other people rich. Lots of other benefits are waiting for you, too, if you just register at themoneyman.com. That's all one word, themoneyman.com, for the Pick Dan's Brain option service. This is about teaching you the knowledge and skills. It's your responsibility to apply these skills and knowledge to your specific situation. It's too much to detail here, but all the info is right there at themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Okay, we are ready to go now. I'm Dan Frischberg. This is the beautiful Alicia. If you want to know what you need to know in order to do the stuff that I'm talking about here, if you go to themoneyman.com, I made a little lesson for you. It's already on video. You do not have to wait for a meeting. You're going to be able to watch it immediately. Immediate gratification. It's going to tell you everything about what you need to know how to do what I am telling you now. So I promised you when you came back, I would tell you the exact numbers. A year ago, if you would have bought this exact long-term holding, this leap on Alcoa aluminum, you would have made 3,351% on your money. That's 33 times your money. If you put $5,000 into buying Alcoa aluminum, you would have like $165,000 worth of Alcoa aluminum right now. And if you put $20,000 in it, you would have what, 660 grand, right? You'd be on your way to being rich. You would be looking for a new neighborhood. You would be looking for a new school for your kids already. Just that one deal. Folks, that's the past. This is going to happen again. Alcoa is not done selling aluminum, but there's hardly any place that people that need aluminum can go to get it. And so this is just happening right now, and you can learn how to do this. The people that I'm going and I'm buying a long-term position, a leap on Alcoa, just that simple. And I'm going to hold it. I don't have to worry if it goes up or down. I don't care what it does right now. I can just tell you that over the coming year, not only is the price of aluminum going way, way up, but Alcoa is going to be selling as much of it as they can get.
Okay,
and that stock is going to be
people.
worth way, way more money.
So explain what is a leap, because people are out listening, and some of them, this is the first time they've heard of it.
Okay, give me 1 second, and I'm going to tell you exactly what it is. Because here's the story. All right, let's say that I was going to buy $5,000 worth of Alcoa aluminum. All right, now that would get me 270 shares, because the price is what, the price a year ago was $3.70 a share. Well, now, wait a minute. Let me give it to you this way. The current value of that share is $37 per share, $37.22. So if I wanted to buy $5,000 worth of Alcoa aluminum, I would be able to buy 270 shares at $37 a share, right? 270 shares. And that would be great. I would own $5,000 worth of a company, and no question that company is going to be worth more in a year. I virtually promise you this, okay? Now, what if instead of that, I used my brains and I did what I teach you how to do in that video that's on themoneyman.com? All right. Now, instead of the stock is at what, $37. Supposing I bought a long-term leap option that would allow me, just like the employees of that company got to buy stock options multi-year. It's a position. It's just like owning the company. I don't get a vote, but I own shares of the company, right? And let's say that the stock is now at 37 bucks, and I'm saying I'm going to buy an option that allows me to buy the stock at 50 anytime in the next year, year and a half, right? And it's a long-term position. I'm not going to trade in and out. I'm not going to go even look at my computer. No trading, no nothing.
And now, Daniel, why would anyone pay 50 when the stock is $37?
Well, because I'm getting to buy this option for $3.70 only, which means instead of 270 shares, I'm getting to buy 1,351 shares of that stock. That means instead of me profiting from 50 grand worth of stock, I'm going to profit from $50,284 worth of Alcoa aluminum, because I'm going to own 1,351 shares that I got at 370. Okay, I'm going to own $50,000 worth of Alcoa aluminum. Now think about this. Let's say the stock doubles this coming year, which I think it's even going to do more than that. Now, my shares that at my $50,000 worth today of Alcoa aluminum is going to be worth then $100,568. Call it 100 grand, right? It's worth 50 grand today. If it doubles, it's going to be worth 100 grand. But remember, I only invested 5,000 because I bought those options for $3.70 a share. It was the same as owning the company. There was no trading in and out. I didn't have a vote, but I own the company. Now, when the company's worth 100 grand, I can sell my shares and get 100 grand for them, right? I only invested $5,000. How much interest do I have to pay to put in $5,000 of my money and get $50,000 worth of Alcoa aluminum? How much interest do you have to pay for that?
Zero.
That's right. Zero interest. Why? Because that's just the way it is. Now, just if you think that this is some kind of a new idea by me, let me tell you about what it really is. John D. Rockefeller, we're sitting in Houston, Texas right now. No matter where you are, John D. Rockefeller made a deal in Humble, Texas, called Humble, Texas. And it's up by the George Bush Airport in Houston. And he thought that he had a feeling, he was a smart guy. He said, I believe there's oil here. So what he did is he went and bought options to allow him to drill for oil on that property in Humble. And he took a bunch of money and he bought options, but the options were one tiny bit of what it would cost to do that whole thing. What he did was he locked in the land, bought options on the land so that he could be the one who drills it. Then he went and raised the money to do all the drilling and build the rigs and do all that stuff near the airport. What did he do? He bought options on the oil land. Then he used his own money for the options, and then he used other people's money to drill and build the whole oil company. Now, if there was no oil on that land, what would Rockefeller lose? He would have lost whatever he paid for the option, right? Nothing else. But what had happened instead? He built Standard Oil. He became a billionaire. He became the richest guy in America at one time. His family became one of the richest families. They became governors and they became everything, all because he bought options on that land. Now, I didn't teach him how to do this. He was just smart and he figured it out. But you know what? I don't know why your kids don't know about this, but I can tell you this. Rockefeller taught his kids how to do it, right? Now, I figured out how to do this with Alcoa aluminum. I actually figured out how to do it with Roku and how to do it with Microsoft and MasterCard, right? Because I wanted to lock in those companies, but I wanted to buy lots and lots of it. I didn't want to just buy a little bit. And I used the same trick John D. Rockefeller used. I bought options on these things that would give me the right to buy it if I wanted to. And then when they appreciated in value, I made all that money. And my son turned a couple of $1,000s into $60,000-$70,000, and then he started doing it more. The bottom line is, why didn't anybody teach you this? Because your parents didn't know how to do it. Rockefeller taught his kids how to do it, and they just get richer and richer and richer. Now, I can teach you how to do it. I can teach your kids how to do it. You should know how to do it. I've taught all my children how to do it, and I am using this exact technique. But instead of worrying about Roku right now, and is Roku going to be worth a lot more money in the future? Actually, it was. It was $30. Now it's like $400. That happened already. I happen to know, beyond my doubt, I can't tell you for sure, I tell me for sure, that Freeport McMoran copper, they can't get any more copper. The world needs more copper. Everybody's hurrying up to try to get more and more, lock in as much copper as they can, because they want to wire, they want electricity. 1 billion people want to have electricity in India, and to get it, they got to wire their houses with copper. And another 1 billion people all over Southeast Asia want it, and another 1 billion people in Africa. They all want to electrify their houses. They all need copper for it. And the 300 million people here in America, they want electric cars. I don't know. I think they're going to hate electric cars, and I think they're completely full of crap about wanting it, but they're going to do it. They're going to make electric cars. They're going to spend billions. The cars are going to cost them twice as much. It's going to cost them twice as much to fix them. They're going to be able to go 300 miles at a time. They're going to have to find a recharging station and sit there for 45 minutes eating donuts while they recharge their car. They're going to hate it. And when they have to get it fixed, it's going to cost them $1,000. And the car, for a crap car, is going to cost them $40,000. But this is what they think they want. Fine. All I can tell you is it takes 4 times as much copper to build that electric vehicle as it does to build a Cadillac SUV right now. Yeah, that's right. And so the bottom line is they think they want it. I want to be the guy they buy it from. So I am buying those long-term leaps on Freeport McMoran and Alcoa, and they want cement, they want iron, they want pig iron, they want steel, all of it. I can teach you how to do it. Go to themoneyman.com. If you don't do it, you're missing the chance of a lifetime, because you're not going to get a replay of this rebuilding. It's all starting right now. Stick around. We'll be right back.
Each week in his live video market and economy update offered to his inner circle, Dan Frischberg delivers the in-depth, professional version of his famous Market X-ray report, live and interactive. Now that means you get to ask all the questions you want. And if you can't make the live meeting, you can watch the report on demand. Then email your questions in, and Dan will email the answers back, or include them in the next live report. Week in and week out, Dan brings you the ideas and specific stock picks from his friends, the people you see on TV and read about in the papers. You'll see what they're buying, how they're hedging, and when they're taking money off the table. At last, you'll get to see how the insiders negotiate the institutional macro bonds that billionaires on Wall Street rely on, the ones almost everyone else never even heard of. When you become an Inner Circle member, Dan will share with you his lifetime of experience and guide you to the best teachers, the best stock pickers, the best option strategists. And you'll be invited to exclusive working vacations in beautiful locations for the Inner Circle only, where you'll rub elbows with some of the most famous investors on Wall Street. So, how do you value the lifetime of skill and experience of a top investor on a mission to share it all with you and help you become one of the few winners? If you've been listening to Dan for a few years, he's likely already made you tons of money, or even more important, saved you from losing a fortune. Now, there are limits to the capacity of the online video sessions, but right now, for a limited time, Dan's offering you the position of charter subscriber, get this, for less than the price of a cup of coffee a day. For all the info or to subscribe, just simply click on themoneyman.com. Themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
This is themoneyman.com. We are fortunate and thrilled to have Tobin Smith with us once again. And Toby, I stopped you right as you were about to talk about a very popular stock, Facebook.
Well, yeah,
everyone knows is made a lot of money, is going to make a lot of money. It is essentially an irreplaceable medium of exchange. It's like the telephone.
It's got 2 billion customers, and its acquisition cost for those customers is basically zero. Name me a business, and that's what people are missing about the 21st century, not the 20th century. In the 20th century, you had a lot of cost of capital. You had to buy stuff, build stuff, rebuild stuff, and so those are asset-heavy businesses. What we invest in are asset-light businesses. For instance,
we call them platforms.
Platforms. For instance, Marriott now does not own any hotels. All Marriott owns is the brands that they own and the reservation system, and the stock never got above $50, and we bought it when it all blew up, and now it's $150, okay? The difference is operational leverage, you can call it if you want to be an accountant. I would just call it zero incremental cost of a new customer. And that when you add a Facebook person, all that it is taking an electron, moving a digital electron, there's no cost. Now, the cost is they got to have a data center.
Let me review what you're saying there, because you speak fast, you think fast. Toby is saying that Microsoft can make 1 million copies of Windows or 1 billion copies of Windows with no incremental additional cost.
Absolutely.
They don't need a building. They don't need more trucks. They don't need more bottles, more syrup, more guys. They don't need any of it. They can make 1 billion copies of Windows anytime they want to with no incremental cost.
Yeah, and now
that cost structure.
Right, and now add the subscription nature. In the old days, we'd buy that software and then it would be, they'd have an upgrade, we'd have to pay for an upgrade, blah, blah, blah. Now, not only do you have zero replication cost, but you have a subscription basis, which has an extremely high retention rate. Because basically, if you're on Windows, you're going to be using Microsoft stuff. Maybe on Google, you're going to use Google Document, et cetera, and that's a different model. But it's the best business models in the world. They don't own assets. They own intellectual property assets, which can be replicated for free. And in the case of Facebook and Google and other guys, the very little marketing cost because the actual users market it, particularly Facebook. I mean, the genius of all was when you said, hey, would you go on Facebook and friend, 100 people that you'd like to follow you? Now you became the salesman for Facebook. I have a lot of problems with Facebook in terms of how they deal with content, particularly disinformation or misinformation content, blah, blah, blah. But what I'm saying is the 21st century created these asset light, incredible subscription businesses that are digital platforms that are 100 times a better business than picking up trash and putting it in a trash can and putting it in a trash hauler and taking it away. You can grow earnings in that business simply by buying new companies, and your earnings will sort of, go a little bit up incrementally. But Facebook just announced $41 billion of revenue this last quarter. They were at $4 billion 8 years ago. There's no businesses in the world that were ever like this.
The question that we started with is all that future stuff, is it already in the price now?
Well, no, I would say this. I would say that, we did have this correction that we were waiting for January, February to come, pull these things out of the crazy sphere. And there's two issues. One is, I tell people all the time, when I ran a mutual fund and a hedge fund at the same time, and that's why I have a hair that's gray, you can't see it. You got to put money to work every day. Every day, money managers, institutional around the world come to work. There's new money you have to put to work, because if you don't, first off, most of these funds, et cetera, you have to have be 95% invested or so on and so forth. But the point is that with things so high, I want to buy the sure things. I want to buy the sure growth that maybe we're high, but for instance, these same platforms are buying back. Apple's buying back $90 billion worth of stock over the next year. So now I have the earnings growth that's locked in, but the earnings per share growth is automatic because they're buying back so many shares. Same thing at Facebook, same thing at Google, same thing at Microsoft, the same thing at Amazon. We own them all, but we own them both owning it, and then we sell, put some call options in or short them if they get overextended, and then we own the long-term options as well. And you blend that all together, that's 60 to 90% a year.
If you own, let's say, a 2-year option on a company like Facebook or Amazon, why bother owning the stock? You're not voting, really.
Yeah, no, it's because it's sort of the ballast. And we like to then sell a covered calls against what we own, as opposed to naked calls, which basically is a lot more risky. So if we liked, for instance, in January, February, we sold put options, we got that premium, but we were happy to have them give us the stock. In other words, put it to us. That's what a put option does. And some of it we did get put, but that way we got lower cost basis on the shares. Because, the other thing is we have new people coming in to manage accounts, and it takes a while to get them squared away to what we're doing. So, I mean, if you had all cash today, I'd be buying energy. I'd be buying stuff related to the oil prices, because oil prices now are going to go up because of what OPEC Plus has said. I'd be buying, I'm not buying value stock, and I would be buying the big digital platforms. Shopify came in and blew out numbers by 45% today. Why? Because they're the anti-Amazon. If you're a small business and you want to have your own website and sell stuff, you don't want to take it to Amazon, because Amazon's going to steal your stuff if it does well. So you only have one other choice: is go to Shopify. Those type of things, and you buy them when the market takes a rest. You buy them. We get recessions. They're not recessions. We get 10% drawdowns, corrections every 6 months. So as opposed to rushing out and buying if you understand the story, you understand the digital platform story, I call it platformity, then you wait for the corrections and you buy, and then you don't care, and then you buy the options, you double up by buying the long-term options, and now you're riding a market, because this bull market probably goes to 5,000 at the minimum, simply because we've never had an economy ever in the history of civilization that injected almost 100% of our GDP in cash, monetary stimulus into the system. If you take Europe, United States, but particularly the United States, if you take everything we've done and everything we're talking about, we have a $20 trillion GDP. We put half of we're going to put $10 trillion of cash into the system, and cash doesn't blow up. It has to go somewhere. When interest rates are so low that it's negative 75 or 100 basis points, 1%, when you take inflation out of it, then what are you going to do? You're going to lock in losing 10% over the next 10 years in a bond, a quote unquote, risk-free bond? Or are you going to, buy very successful companies that are continuing to get successful, that are raising their prices, are buying back shares, and are growing their earnings 20 or 25% a year for the next 5 years? Dan, you may know better stocks. Now we certainly own some smaller ones. For instance, I don't know about you, but Sonos. So Sonos is one we've recommended for years. They have the best wireless sound system going. And if you're in a new house and you want to, the first house that I built that I wanted to have a kick-ass stereo system cost me $45,000. I now have a better sounding system that costs $1,500. and it's wireless, and I can move it wherever I want. I mean, it's insane. So Sonos is, now that people have been in front of their TV or their sound system, they say, boy, that sucks. So they go over to their friend's house, they upgrade to Sonos, and it's. I always think they're going to get bought by Apple because it's an Apple-like interface. You know, it's brain dead easy. I can do it, so that's what I call brain dead easy. We like Sonos. We've liked it from $15. It's now $45. It pulled back a little bit here, but we'd be a buyer again if it got under $40.
Is that kind of like Roku? Those sound.
Well, no, it's just speakers. In other words, if you have a TV at home, you have a big flat screen, right?
Right.
And then you want to put a speaker bar in front of it. That would their version's called a beam, but you have a speaker bar. But then, come on, man, you want the sound, Dan? So you get the two side woofers, and then you get the wireless bass player. And we were listening to The Voice a couple nights ago, and I thought we were in a concert hall. I mean, it sounded that good. So that type of transformation, that's a pure play on, what I'm just call, there's two big themes we're playing. One is, dude, I got to upgrade my crib, right? So we own Trex. When you're building a new house, et cetera, or you've been out on your deck for a year and it's falling apart and it's wood, you go and say, okay, I can't take it longer. I'm going to buy Trex, which is not wood, never loses color, never get a splinter, et cetera. And good luck finding somebody to do that for you. It's about a 3 to 4 month wait to get a handyman who actually knows how to build this stuff. But be that as it may, it's going into every new house that's being built, et cetera. So that's upgrade my crib, bro. That's our theme. The upgrade my crib, bro, is Sonos, because once you get it, then you want it in your other house, you want it in your apartment, your kids want it at their house, and then they have a new portable that's coming out for $179 that sounds as good as my $15,000 speaker from 2008, right? So that theme of upgrade my crib, and the other one is decarbonize my world, bro. A lot of what happened in the SPACs was that the YOLO, you only live once, FOMO, fear of missing out, and then buying stocks on your with your fingers on an app. I call them aspirational stocks. The younger person wants to have not global warming.
Hold it again. The time flies when you're here, so I love it. And I'm going to stop for one more of these breaks. Again, transformativeresearch.com. You want to go there immediately and read everything that you can find, and then go on Google and put in the name Tobin Smith, and then read every single thing that comes up. And I've been reading everything that's come up for 25, 30 years. I can't tell you how much money he has made me, and do it now. We're talking to Tobin Smith. We're going to stop for a break. We're going to come back. It's almost over. We can't keep going, but we can do one more. Stick with us one more time.
I will.
You've heard it said right here, with enough leverage, you can multiply your investing strength and move mountains. So think about it. How'd you like to own companies like Roku or MasterCard or Raytheon and put down as little as 5 or 10% to unlock the treasure chest of unlimited upside gains? You can, all the while drastically reducing your risk, and you can do it with zero borrowing costs. You just need that leverage and a little know-how. So Dan Frischberg is going to allow you to pick his brain to better understand the concept of leverage. These are special online training sessions called the Pick Dan's Brain Option Service. You can use just a little bit of money to potentially make incredible returns. If you want to make real money, you owe it to yourself to take advantage of this once-in-a-blue-moon opportunity. All you have to do to try it is to go online and register so you can see the results for yourself. The cost is next to nothing, and look what's waiting for you. Each week, Dan will discuss a few detailed trades, quality, actionable trades. You get detailed instructions on buying and selling specific put and call options. The Pick Dan's Brain Option Service shares specific underlying stocks, expiration dates, strike prices, and shows you how much money you could make instantly. It's Dan Frischberg's time-tested, proven money-making discipline that he's used for 50 years to make himself and a lot of other people rich. Lots of other benefits are waiting for you, too, if you just register at themoneyman.com. That's all one word, themoneyman.com, for the Pick Dan's Brain option service. This is about teaching you the knowledge and skills. It's your responsibility to apply these skills and knowledge to your specific situation. It's too much to detail here, but all the info is right there at themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
We're back. This is the MoneyMan Report. Whether you're listening to us on a radio station, which is lovely, but actually, if you come to themoneyman.com and if you go to what is that clear channel when it's called iHeartRadio, there's a whole bunch of places where you can actually watch the video of this, and then you're going to see me and Tobin Smith.
Oh, I didn't know that.
To each other. Yeah, it's cool. You're in the 21st century. You don't really have to listen to us on AM radio, although we're happy to be in the car with you. But let's go back. You were talking about Sonos when I stopped you.
Yeah,
so,
I just.
What is the symbol for this?
Yeah, Sonos is another example of not only digital transfer, but also the fact that being locked up in a house for a year changed a lot of people's perception on what sounds good, what looks good. I can't tell you how many couches have been thrown out, lifestyle, etc. So once you become aware of it, like once you get one Sonos speaker, there's no such thing as one Sonos speaker, because you're going to get other ones. You're going to get one for your bedroom. Your kids are going to want one for their things, et cetera, et cetera. They're not inexpensive, but if you amortize them over a very long time, which you do, it's a lovely. It's not a necessity. It's not heat or cold or water. But for me and most people like me who love sound and so on and so forth, you can't beat it. So that's one example of things that we own. But also, I want to make sure people understand that we run a portfolio that's just income. And if you're an income investor, I have never seen a time where we can buy 15 different MLPs and some special ETN exchange traded notes that we're earning about 12% yield, 1% a month. Many of these are pay dividends monthly. Some other ones are quarterly. We have a company called USA Compressor, which is down your way in Texas. They own the big 10,000 horsepower compressors. The ticker symbol is USAC. They pay $2.05 every year, Dan, for the last 18 years. You know why? Because the people who rent the compressors or lease them, if they don't have that compressor, you can't pull any of the natural gas out of the ground. If they can't do that, they ain't making no money. So even when the world went south, these guys have collected $3 billion in lease payments, and they've had like a $1.2 million default out of all that. Even when, we went from 2012 to 2014 to 2016 to, blah, blah, blah. The compressors you have to have. It's a must have. Well, when the world blew up last year, we bought a ton of the stock at $5. It's now $15. But think about at $5, we're getting $2 a year in dividends. I mean, that insanity ain't coming back. But even today, this stock we think is worth $22 to $25 based on its cash flow and growth. It's 50% or 49% owned by Energy Transfer, ticker symbol ET, which is the largest operator of all this stuff. But examples like that, why on earth would somebody be in a bond fund that's guaranteed to lose money? Because we know as interest rates go up, bond values go down. Why on earth would you do that? When interest rates goes up, that means that the economy is picking up. And when the economy is picking up, people are using more energy. I don't know. But I'll tell you.
Compressor company, the name of it?
It's called USA Compressor, ticker symbol USAC. We like to buy it anytime it goes under $15. When it sends out its quarterly 1 cent or 2 cent dividend, it'll go down that day when they pay the dividend. So we'll buy it for new accounts 2 days after, and it comes right back up, because there's no place on earth that you can get, even at $15, you're getting a 12, 13% dividend. That's rock solid. All the tenants are all AA, AAA rated companies. I mean, it's Exxon and it's Mobil and so on and so forth. They can't work without the compressor. Even if prices went to zero, they would still be having to do the compressor, because you can't move anything through a pipeline without a compressor. And the question is, well, some of the big guys do buy them. That's true. But for 99% of people who are extracting oil or natural gas out of the ground, it's a pain in the ass to use them. There's all sorts of work you have to do. I mean, it's a must-have, not a nice-to-have. And so I'd rather lease it and have it, properly maintained, be able to swap one out if one goes down, blah blah blah. And it's like, why do people hire? In real estate, we're seeing deals in real estate now where we're getting 8-9% cash flows and upside. So it's not just growth. I mean, we also love income. I personally, love seeing those dividends hit the brokerage accounts. And we still have that opportunity because rates are so low that as rates start to come up to some value and net asset values are going to move up, then these high yields, are not going to last forever. So let's get them while you can. People make a big thing about corporate taxes. But if you look, I'll just take the top 100 companies in the United States. They pay about 4% of their income in income taxes. I mean, the income tax rate may be, it used to be 15% and then 19%, and then now, it's going to go to 28% or whatever. But that's not what they pay, because 70% of their income is overseas. So this idea that somehow raising corporate taxes back to just where they were pre-Trumpian, the idea, the thing, one of the things that Trump got right, I do believe, was when they cut the tax rates, what it did is it ignited the animal spirits. It made somebody want to go out, an entrepreneur go out and do something. Because even though they probably did not understand that they only really pay about 3%, if you're a personal business owner like me and you have a pass-through income, now, wait a minute. Now it starts getting to you, because now I get a 20% reduction on my pass-through income. And, that's a good thing. But the swing to the left was inevitable because of the swing to the right. Donald Trump, God bless him, hate him, love him, whatever, scared enough people. They said, all right, I'm done. I can't take it every day, 12 hours a day. And the result of that is that the left's going to push through some things. And then if you look at from a macroeconomic standpoint, we didn't have enough people to employ in 2019. Remember, we had the highest level of jobs available in 2019. Well, guess what? It's 2021. We have a higher level of jobs open that can't be filled. We don't have enough labor in the United States, Dan. I don't know the solution for it necessarily, but I agree with you that as long as I can get, $2 or $3 grand a month that I wasn't getting doing my job, I'm going to stay on the dole, as long as I can. Well, that's going to be with us till the end of summer. I don't, there's no solution for that. But as an investor, you're looking forward 2 to 3 years. In 2 to 3 years, we're going to have to pay more to get people to work. That's what they discovered. And there's a diminishing return. You realize 60%, if you take the households in the United States, about 19 to 21% live under the poverty level. But the 43%, the next level up, almost 2/3, are in what's known as asset-light, income-constrained employed. In other words, the working poverty, where they can only pay 8 out of the 10 monthly bills. That is a lower middle-class world. We as a country and we as industry, we as business people are going to be addressing that whether we want to or not, because it's a huge amount of population and they've been economically traumatized. So Biden's going to do his best. He's going to overshoot it like everybody always does. And then we'll rein it back. But we have to address this as a country because there's not enough rich people. If we took all the income for all the rich people, we wouldn't get close to paying the Medicare bill. And, but my favorite number is, you're sucking down that Medicare, okay? Well, you probably paid in a lot, but the normal couple made 75 grand a year, paid in $69,000 to $72,000 over their lifetime. And they're going to pull out $240,000 of Medicare benefits on average.
Right.
Who makes up the difference? It's not corporate income tax, it's personal income tax. So we have a lot of structural problems, and we have.
Toby, I'm completely out of time, and we're just getting so interesting. But
no world. No,
end.
we're talking.
Toby, I'd love to have you come back and do it again. Last time we did it was probably a year ago. Let's do it more often, and it was great. Thank you.
All right, brother.
You've been listening to the sound of your money growing. This has been the MoneyMan Report with your host, radio and TV money man, Dan Frischberg. Hear it again every weekday morning here on Bradenton's WWPR, broadcasting worldwide. It's Better Living Radio.